Hey everybody, how are you doing? I'm so excited to have so many of you with me today. Tim, you need a hard money lender. You're in the right place. Excited to talk about it. Jose, can't hear anything. We start right at 6 p.m. Eastern time every single week. So we get it started so people get notified and those things. So you're in the right place here. Frank, no sound, gotcha. Thomas, we're on and live now. Please confirm you can hear me live and clear. Lawanda, thank you for telling everybody it's going to start in 10 seconds. I hope you can see the countdown on there on that screen, but excited for so many of you to be with us today. Let's jump right into this, guys. We are talking today about investing versus speculating, okay? This is a really big subject, and this is a subject a lot of people don't understand or have some problems with. Actually, yesterday, I was recording a podcast for my Income Hacker podcast channel, and we were talking a lot about investing versus speculation, how it gets a lot of people in trouble. You're going to love this topic. As a matter of fact, you're going to walk away with a few things you're going to learn. You're going to walk away with a finding tip on how to deal with bankruptcies, how to find properties that are in bankruptcy. You see, every single week, I give a finding tip of the week, and today we're going to be talking about bankruptcies. We're going to talk about the difference between speculation and investment. We're going to understand the difference between risk and rewards with each one of those. Is speculation the same as gambling? We're going to talk about this. My rule when it's okay to speculate, and so much more. All right, guys, in today's agenda, we're going through our welcome and updates, which we're doing now. We'll go through some real estate news and some updates. I've got some interesting things I know you're really going to enjoy. We're going to go through our finding tip of the week, which we're going to be talking about bankruptcies. Then we go through our topic of the week, which is going to be our investing versus speculation, what the difference. Then our famous section with our free t-shirt giveaway, as well as a free tool of the week. Give away a tool every single week to help you in your real estate investing and what you're trying to accomplish there, because we want to help you absolutely free. All right, guys, this show is for entertainment purposes only. And before making any financial moves, you want to consult with a real estate professional, attorney, CPA, or other professional in the various subject matters. Everybody's situation is different. There's no one-size-fits-all approach. DHM may receive payments on the show for sponsorships, guest forms of books, items, discounts, other remediations. As with anything in life, results come from education, following a system, hard work, and determination to follow through until the end. Welcome, Cynthia Brown. Thank you for being here. Appreciate you being with us today. If you haven't followed the example of Tim and Jose and Frank and Thomas and LaWanda and Cynthia, and I know there's a lot of you who haven't, please comment with your name, your first and last name, and your city and state. And if you're listening to this as a recorded video, please still do that. I really appreciate the feedback to know where people are watching and listening from, because I can build that into some of the content and those things that we're actually doing. And if you're watching this on a recorded instead of joining us live like Cynthia and LaWanda and Thomas and Frank and Jose and Tim and so many others of you, please join us live. You see, if you join us live every Tuesday at 6 p.m. Eastern Standard Time, you can ask questions. So like right now, Tim could type a question in and I would answer it. Or Frank could type a question in and I would answer it. Or Cynthia could, or anybody could type a question in and I'm going to answer that. If it's around the subject matter, even if it's not, I'm going to give you the best answer I can in a short period of time so we can make sure we're moving with the subject matter. But I love doing this. I love real estate investing and I love helping people become successful with what they're trying to accomplish in their real estate investing and their hopes and dreams. Okay, this is one of the favorite segments. This is our famous t-shirt giveaway. Let me show you what we're going to be giving away. So we've got a few different options here. What we've got here, this is our original. This is our I Flippin' Did It shirt. So I call this our original and one of our first ones. This is what I call our summertime shirt. Whoops. Got it upside down there. This is our Flipping Legends shirt, and it's got our little DHM logo on the side there, which I like. The other one has it on the back. This is our contractor shirt, our rehabber shirt. I made it through rehab. Love that one. And then this is our 3/4 shirt, maybe our fall time, our baseball. This is our Flippin' Legends shirt. The other one you saw was our summer edition, and we've got our cool logo there on the back. But we're going to be giving away a t-shirt just like this to one of you. And if you'd like to be the t-shirt winner, I want to show you how you can actually go about doing that and become the winner of the week. So at the end of each live cast, we will announce last week's winner. So starting just barely when we hit go, this is all for next week's winner, and we'll be announcing the winner next week. But last week's winner we'll be announcing today. So at the end of this live cast, I will announce who the winner of last week's was. Now, if you are the winner or you have been a winner in the past, please take a photo. We want to see you and post it. Wear that shirt, take a picture, and put it on our Facebook page. So if you go to facebook.com/DoHardMoney and post a picture there, I would greatly appreciate it. And I would love for you to become a winner of the week. So the question is, do you want to get a free t-shirt? And if the answer is yeah, well, type it in. If you want a free t-shirt, let me know. But before you do, let's see, Durham, Cynthia's in Durham, North Carolina. Thanks for being with us today, Cynthia. Okay, so if you would like to be our t-shirt winner, what I need to have you do is ask great questions and leave positive comments. Be highly engaging like Patricia Jones is. She just said, hi from Louisiana. Comment on the recorded video. After we do this video, we record it and we put that on YouTube so you can go back and watch it time and time again. And with all of that, each week we'll choose one winner. And that winner will get one of those shirts that we talked about. And we've got a winner for this week. Stay tuned to see if you are that winner. So if you like these live casts and you want to see them continue, I really need your help. You see, all this content I put together is for free and it takes a lot of work. As a matter of fact, I'm sitting in a studio that has lights here, light here, light here. It's got camera here. It's got screens here. Like there's a lot that goes into this and I do this for free, but I'm looking to try and get more subscribers. So currently we're at 5,620 subscribers and my goal for the end of July is 5,725 subscribers. So I'm looking for 105 new subscribers to help me hit my goal by the end of the month. So my question to you is, are you currently a subscriber? If you're not, if you could please go to YouTube, hit the subscribe button on our Do Hard Money channel. And if you are my newest subscriber, please type it in the comments because I would like to personally congratulate you and thank you for being my newest subscriber. Now, that said, one of the great things about being a subscriber is every single day I upload a new video. This video is going to answer us questions. So like on the screen here, I've got short sales pros and cons. Should I self-manage a rental property? These are questions that you ask or other people ask, and I create videos around those. And so as a matter of fact, if you've got a question you'd like to have me answer, when you watch one of those short videos, if you type it in the comments, I'll create a video like that for you and for all of our other subscribers. So you can watch those videos. Now, the great thing about these is they're short. They're anywhere from 3 minutes to no more than 12 minutes. So they're really quick videos answering a specific question. And that's one of the things you'll get as being a subscriber. So please hit the thumbs up button, hit the subscribe button, the bell notification. Our YouTube channel is Do Hard Money. And if you leave a comment on the recorded video, it's a big help. Now, the biggest help you can give is telling somebody else about this YouTube channel. I would greatly appreciate it, and it helps us grow our message of helping people, and I really love to do that. Okay, guys, Cynthia, let's see, Patricia. Okay, just want to make sure I didn't miss a shout out to anyone. Okay, so what are you going to get today? Every single week, like I said, I like to give away a tool that can help you in your real estate investing. The tool we're going to do today is the property value analysis sheet. This helps you determine if the property is a good deal or not a good deal by understanding the comparables, the sold, the actives, and everything else. At the end of the live cast today, I'll give you a link where you can download that. You're going to want to get your hands on this. I've been working on this form for over 20 years, and I've really got it dialed in. We use this form on a daily basis, every single day. It will be a huge help in your real estate investing. Okay, guys, let's jump into our real estate market update. I certainly would love to see a few more hellos and questions. So if you've got some, type them in your comments or type them on the recorded video comments, and we'll get those answered for you. Okay, guys, the real estate market update. Bidding war decline. Another sign the U.S. housing market is is easing, but competition is still white hot in many cities. The cutthroat conditions across the U.S. real estate market are showing signs of easing. What does this mean? It basically means we're starting to get some more inventory. We're having less buyers. It basically says it's not quite as bad as it used to be, which is kind of a sign of things getting back to what I'm going to call normal. This is the hottest markets for real estate. Most of the markets where we're seeing lots of interest are in the sweet spots. They're in the mid-sized cities that are more affordable, yet still close to the bigger urban areas with lots of jobs, says Realtor, senior economist of Realtor.com. Really interested if you live in any of these areas or you know any of these areas. I'm just going to shout a few out: Indiana, New York, Tennessee. What else have we got here? Georgia, North Carolina, Pennsylvania, Colorado. If you're in one of these areas here, please let me know and type that on the screen. MarketWatch says pending home sales surge higher, but economists warn that the housing market could soon hit bottom. Pending home sales rose 8% in May compared with April, according to the National Association of Realtors. All regions saw an uptick in sales, led by a 15.5% surge in the Northeast. The South saw the smallest increase with 4.9. It's still an uptick, right? So we're still seeing that. Pending home sales surge. Cynthia's saying she is in North Carolina. She's one of those markets. That's awesome. Still, economists generally anticipate that the second half of 2021 will see a slowdown in real estate transactions. Here's why. Mortgage applications are down. The latest mortgage application, the Mortgage Bankers Association, is saying that data is predicting that there's going to be a slowdown because they're seeing 17% less purchase home applications than they did a week ago. The same week, June 25th, it declined 6% the prior week. So we're seeing fewer loan applications. I don't know if that's necessarily a bad thing. I don't think that means that the bottom's going to fall out of this, but I think we might get to some normalization. The average loan size for the total purchase application increased, indicating that first-time homebuyers who typically get smaller loans are likely getting squeezed out of the market due to lack of entry-level homes. So they're just saying, hey, we're just not going to be buying. As housing boom begins to fizzle, weekly mortgage demand falls nearly 7%. So this is another report by CNBC. Weekly mortgage demand fell 6.9% for the week, according to the Mortgage Bankers Association Seasonally Index. That's interesting. Pending home sales sink as the housing market falls back to earth. Now, these headlines seem like the sky is falling. I don't believe that's the case at all. An indication of existing home sales fell in April, suggesting that the housing market begins to cool off in the face of home prices. Pending sales dropped 4.4% in April compared to March. On an annual basis, pending home sales were up nearly 52%. This is nothing to panic about. Contracts signed are approaching pre-pandemic levels after the big surge due to the lack of sufficient affordable houses. The upper end market is still moving sharply as inventory is plentiful there. When the housing market will cool off, experts are predicting that the real estate market won't slow down until late autumn, and even home prices will remain high, according to Dr. Lawrence Yun, chief economist for the National Association of Realtors. By then, more than construction will be coming onto the market to help even out some of the supply. For those who are willing to wait, more choices may be available. But this is the kicker. It may be a little higher interest rates, which we're starting to see, and something we need to keep a close eye on. This is some good news, though, which is going to help some of this, is lumber prices drive more than 40% down, more than 40% down in June, which is the biggest drop ever on record. The great lumber bubble of 2021 has finally popped early in 2021. So what we're seeing earlier this year, lumber prices exploded due to a combination of reduced supply, mill shutdowns, surging demand for new and improved houses. At one point, the lumber shortage led the average price of a single-family home to increase by $36,000. What that basically means is a house, it was $36,000 more for the exact same house, not because of land, not because of other materials, simply because of lumber. It was $36,000 more, but we're seeing that starting to come down, thank goodness. These are the cities with the biggest share of homeowners in danger of foreclosure. One group of homeowners continues to be behind on their mortgage payments. If the trend continues, it would threaten the strength of certain real estate markets across the country. Around 14.7% of the 7.6 million FHA mortgages outstanding national were delinquent as of May, up slightly from the previous month. Additionally, 10.5% of these loans were seriously delinquent, meaning they were 90 days or more past due and the danger of going into default. This is something we got to keep a really close eye on, guys. These are the cities with the biggest share of homeowners in danger of foreclosure. I'm going to call out a few of these, but if you are in one of these, let me know. Alpharetta, Georgia. We've got some places in Texas. We've got places in Illinois, more places in Texas, DC, Virginia, Maryland. Let's see, California, Texas, Pennsylvania. These are cities that have the biggest share of homeowners that are in danger of foreclosure. This is a big one that we need to keep a close eye on. Okay, guys. Reginald is our newest subscriber. Please give Reginald a big golf clap. Maybe is the appropriate one. I think that's what they call it. Anyway, thank you for being our newest subscriber. How to survive inflation. 3 successful investors weigh in. There's a couple of things to look at. Number 1, high quality stocks help hedge inflation. Precious metals, gold and silver, and real estate have traditionally been safeguards against inflationary pressures. If you don't understand what inflation is, it's basically what if you paid $3 for milk yesterday and you paid $3.50 for milk today for the same goods or service, you're basically saying it's costing you more to get that. That's inflationary pressures. It's costing more to get the exact same thing is a very basic definition of that. I hope that is helpful. All right, guys, let's jump into our property finding tip of the week. But before we do, I have got to grab a drink here. Thanks for Patricia and others for giving Reginald a warm welcome as one of our newest subscribers. If you're a new subscriber, please type it because I want to give you a shout out and a thank you. Okay, our property finding tip of the week this week, we're going to be talking about bankruptcies, okay? What is a bankruptcy? A bankruptcy is when someone files that they cannot pay their bills. There are 2 types of bankruptcy. There's Chapter 11, which is reorganizational, which lowers your payments, and a repayment plan. And there's Chapter 13, where they write it all off. Let me make sure you understand. If you owed a bunch of money, you could apply for an 11 bankruptcy. And the court's going to say, okay, we're going to restructure the debt. We're going to get rid of any future interest that's going to be charged. And we're going to start a payment plan, and we're going to distribute that payment to multiple people based upon some sort of formula. And you make payments on that. And eventually when you make all the payments, you're done. You've paid everybody because they've gotten rid of the interest, kind of stopped the bleeding. Chapter 13 is where you basically say, I can't pay these guys, I don't have the money, and they say, great, we're going to dismiss, you don't owe any of this. Now, there is a difference between a secured creditor and an unsecured creditor. A secured creditor has it against a tangible asset. So there's some things that we need to be looking at. So with bankruptcy, though, the discharge is when the court cancels your obligation to repay the discharged debt. When it's dismissed, the court does order this the court order ends your bankruptcy case without your debt being discharged or eliminated. It's basically mean you really didn't file. So discharge, you've gotten through it all. Dismiss means you started but you didn't finish, and so it was dismissed. This happens when somebody gets into financial trouble. They file for bankruptcy, it gets dismissed for non-payment or for some other reason. But here's the thing, if we're looking for people that have bankruptcies as a way of finding properties, this really isn't enough if they just have a bankruptcy. If they have no equity in their home, that's not going to do a lot of good for us. It's not going to be a great opportunity for us to help somebody out. So I like to look for a few things. I like to look for single family homes, condos, townhouses, not listed on the multiple listing, less than $500,000 in estimated value with 30% or more of equity. That's what I actually like to look at. And so how do I do this? Well, let's just put it in an area and let's just kind of talk about all of this. Let's jump back over to my browser. Oh boy, let's get this rocking here. There we go. Okay, so if we just type in here Atlanta. Okay, Atlanta, Georgia. I pick on Atlanta. Who is with us from Atlanta today? Let me know. So we've got it rolling here. So bankruptcy. Right now in Atlanta, there is 2,081 people that are going through bankruptcy. But see, I've already put some filters in here. So these are residential. They're single family condo townhouse. They are in a active bankruptcy or had a bankruptcy dismissed. It's 500,000 or less is the value, and it's 30% or more of equity. I have 2,081 people that match that exact criteria that are not listed on the MLS. And so any of these properties, just say like this one, we can come here. We can say we think there's $161,000 of equity. It's not listed on the market. We've got prior pictures for where it is, and we can see here this is the owner, and the owner obviously lives in the property. This could be a great opportunity for us, because here's one of the things. When somebody files a bankruptcy, the court's going to say, do you have some assets? This might be a way of selling the house, taking care of some of those problems, and being able to move on with life. This is a great way to actually find properties. Now, once you find these properties, then what you've got to do is decide which ones you're interested in. Once you decide which ones you're interested in, you can add a list or create a new list. So we'll just call this the BK list. Okay, once you have actually done this BK list, then you can come over here and you can do a skip trace if you want to make phone calls to these people. If you're going to do that, you come here, you select your group. With your group that you've just created, let's see, you've got these guys right here. We can add these selected ones down here, and here we go. We are done. Now with that, we can use those 3 contacts, and we can place an order, so we can do a skip trace. Now, what the cool thing is with your skip trace, it's processing right now. They'll get an email saying that they're done, and so that may take a second or two. So then once we actually have those, here we go. So this one we did not get phone numbers for. This one we got 3 phone numbers for. This one we got 1, 2, 3, 4, 5 phone numbers, and that cost me, it's actually only going to cost me 24 cents for the cost of the skip tracing. And then I can make phone calls. So I could call this lady right now and say, hey Mary, wondering if you have an interest in selling your property on 66 Spring Lane. It is just simply that easy. But let's just say you didn't want to do that, and let's say you wanted to just send a postcard. Well, I can grab this postcard. I can view recipients. Oops, I've got a different recipient in here. Same type of concept though. So then I come here to a print preview. Once I hit the print preview, I'm looking at the actual one. It'll put their information. I can download it, or I can click send, and here we go. It automatically is going to send that postcard for me, and I don't even have to worry about it. Now there's lots of different postcards, so let's just end this campaign and start a new one, just because I was messing around a little bit with some things. So I can come here and I can start a new postcard campaign. Once I do the campaign, let's save that, and then let's move forward with a print preview. So there's a lot that we can do here, and we can use certain templates, and that's all made for you. We can do email marketing. That's one of the things I forgot to go over, is this also is our bankruptcy list. If possible, it's going to give us email. So like this one, we got 3 different email addresses, but we didn't get email addresses for these 2. So that's also helpful, because we can come here to our campaigns and do the emails, or we can also do some calling. That's the other thing that we can do here. So all of this are things that we can be doing to try and find great deals that we're actually wanting to go after based upon bankruptcies. As we talked about, it's just not enough just to have a property that's in bankruptcy. We want to make sure it's got some equity. So that's basically where we're looking at. If you're a member, that's our Investor's Edge, where we create those buckets. We build the list as we talked about, create the list, add it to a new list, give the list a name. We call it BK. And then that is very important, how you actually do your naming, because if you get a bunch of them, you're going to want to be able to go back and find it. Now we need to market to them. We can call them, we can send a voice broadcast, send a postcard. Those are the types of things that we can do. So be very interested. Please put in the comments if you've done anything with bankruptcy properties and trying to help people out. They're going through a bankruptcy. Put it in the comments. I would be very interested to see. Okay, guys, let me grab a drink here. Grab my breath. Investing versus speculation. What are the difference? What do you need to know about it? And how can this make a massive impact on your financial net worth, your investing strategy, where you should be going and what you should be doing. We're going to talk all about this today. You're going to walk away with a few things. Number one, you're going to walk away with the difference between what a speculator and an investor is. We're going to talk about risk versus reward. We're going to answer the question, is speculation the same as gambling? We're going to go through what I would call my rule of thumb of when it's okay to actually speculate. So let's talk a little bit about investing, okay? Expending money with the expectation of achieving a profit. That's what investing is. Expending money with the expectation of achieving a profit. That is what investing is at its core. Let's talk about what speculating is. Speculating is a form or a theory, a conjuncture about a substance with firm evidence, right? Without firm evidence is really what we're looking at. So the different ways you can speculate with money, you can speculate with time or invest. You can invest or speculate with energy, coaching, or advice. But here's the risk. All investing comes with some level of risk. For taking on risk, there's the hope that there's actually a profit. You're going to make some sort of profit. Well, speculating is taking an unknown amount of risk because you really just don't know what is the risk you're going to be taking on. So let's go through a couple of examples here. Let's say I found a property I wanted to flip, and the purchase price on the property was $150,000, and the rehab was $50,000. There's a firm scope. We've got multiple contractor bids, right? So I go and look at some comparables, and 3 houses just sold across the street for $275,000 in the last 30 days. They've got the same square footage. They've got the same beds. They're in the same condition. And 3 houses down the street also sold that are active right now for $280,000 for more money with the same square footage, the same bedrooms, and the same condition. So if I'm doing this transaction, how much am I really risking? How much risk am I really taking on? Well, since I got really great comparables, they're really close to the property, they've got the same bedrooms, bathrooms, square footage, and obviously this is a very unlikely scenario, but with this, I'm taking on very little risk. Now, it may be more likely if they've got a couple of comps, but not 3 comps, and there are some comps around the corner. Like, you can get really close to this, but the closer to this, the less risk that I'm actually taking on other than some market risk. So if the real estate market collapsed tomorrow, or the United States was attacked or something crazy like that, that's going to have an influence. But those things are black swans that happen not that frequently. So let's talk a little bit about speculating. Let's say I buy a piece of land in the middle of nowhere, and I'm hoping that development will actually get there. Say I purchase it for $150,000, but I have no comparables. There hasn't been any solds in the area. And so I'm looking at this saying, I'll just hope that the path of progress will make it to me. Well, in doing that, how much risk are you really taking on? My answer is, you're taking on an awful lot of risk. You have no idea what the future will bring. You have no comparables for actives or solds that are going to tell you that. The path of progress may turn a completely different direction. You may be to the left, and the path of progress actually turns to the right. So the closer I can be to investing and the further I can be away from speculating, the better. Okay, and here's some examples that I see quite commonly that real estate investors make as a mistake. And this is up and coming areas. There are comparables in another area that's sold, but not the exact area. You're hoping you can push the values. Hey, this is an up and coming area. Around the corner properties are selling for a lot more, but they're not in this area. But I think I might be able to get them to do that. That becomes a level of speculation. Now, part of that might not be speculation because we can say, well, we've got comparables selling for $200, but we don't have them selling for $250. So if you think you're going to get $250, you're speculating on that extra $50,000. Maybe you're right, maybe you're wrong, but speculation is not something that a hard money lender is going to be interested in taking a chance on. So you may be able to get the higher value, but this is speculation. So, and this is where the risk is very high. You don't have a solid data like you do with houses across the street, or knowing this property just sold, so you know that it's a good property. So why are people interested in speculation? Well, it comes down to a high reward. Speculation has high risk and high reward. And you've all heard all these glory stories like, I invested money, or I did this, or I bought this, and all of a sudden it's worth a whole lot more than it was. those glory stories of speculation are super motivating. People say, oh man, I wish I would have put a couple of dollars into some investment because it'd be worth billions right now. If you would have invested $1 in Google, you'd be a millionaire. If you would have invested in Apple, you'd be a millionaire. If you would have bought that property, you'd be a millionaire. Like, these stories are out there, but a lot of them about speculation, the big problems you'd never hear about. So let's talk a little bit about gambling versus speculation. So speculation isn't compared to gambling, but they're not the exact same thing. You see, gambling is a game of chance, where speculation has some investing element to that. Like buying land in the middle of nowhere, you still own the land. So it's less about gambling where you have nothing to show for that other than the opportunity to play a game of risk. So let's talk a little bit about the level of risk. So there's the investing that has moderate risk and speculation that has high, or I should say, extremely high amounts of risk. So with this investor attitude, investing should be cautious and conservative, where you're talking about speculation that's really aggressive. So the question I really have is it okay to speculate? Well, if somebody has a net worth of $5 million, they can speculate on $25,000 if that's going to be their massive loss. Would that be acceptable? And I think the answer to that is yes. If somebody has $100,000 and wants to speculate $25,000 or 1/4 of their net worth, I don't think that's okay. I think it's something that you've got to be concerned about. You need to be very careful with that. So investing in stocks or speculating on stocks. So stocks, you have no control over them. The harder you work does not make the value of those stocks actually go up. You have no decision-making authority or power, and it will be worth more in the future. It may and it may not. So the question there is, when do we turn that into, when is that actually speculating versus investing? But there's a couple of things I think are really important that our real estate investors like you and I need to be considering. One is geography. Where is the property located? Is it in an active area or path of progress? Asset selection, are we dealing with single family or are we dealing with commercial? See, in the end, the closer you can have comparables as close to the property, the better it's going to be, the less speculation you're doing, the most investing you're doing, and the less risk that you have, the closer those comparables are actually there. So my question is, how can I make the most amount of money with the least amount of risk with the least amount of work? That's kind of my triangle that I like to put together and say, I want to make the most amount of money with the least amount of risk, with the least amount of work is kind of my triangle. And now some people, when you talk about this, they get into some type of crazy multi-level investings because it seems good or it seems like gambling, and then you're back to speculating. So finding that balance is difficult, but it is a very worthy goal, because the closer you can get in that balance, the better off that you'll actually be. All right, guys, if you are interested in our complete system that takes brand new investors through flipping their first home, it is called our Find, Fund, Flip system. There are dozens of hours of training. There is deal finding software, access to our 100% financing. Go to DoHardMoney.com/get started. Check it out, because you are thoroughly going to enjoy it and it will help you in your real estate investing. Now, we talked about the property value analysis. If you'd like to get a copy of our property value analysis, this will help you determine what properties are worth and what they're selling for. All you've got to do is text me your email address. Text your email address to 435-294-0433. And as Cynthia says, you will love our Find, Fund, Flip program. I really appreciate that, Cynthia, very much. If you enjoyed these, please hit the thumbs up button, hit the subscribe and the bell notification. Also, leave a comment. Let other people know you're enjoying it, and tell someone else about it is very worthwhile and very helpful to us. One of the things I'd love to know is what future topics you are interested in. What are you interested in? There's some on the screen here that I would love for you to give me your feedback on. So would you be interested in business partner deep dives, or virtual wholesaler, finding cash buyers, or seller financing, sales skills? What are you interested in? Please type it in the comments. type it in the chat. Let me know what it is so I can create some trainings around those that I can share with you. I would love to do that. Now, if you're enjoying what you heard today, you've got to check out my Income Hacker podcast. And you can share that with that podcast. I interview other experts and find interesting information, and check it out at Income Hacker. Now, you can listen to that on Alexa or Google Home, or you can listen to that on your iTunes or Stitcher, Spotify, any of those. Cynthia says she wants to know seller negotiation. I love it. We'll add that to the list, Cynthia. I really appreciate it. If you have not already gotten that property value analysis, please do. All you've got to do is text me your email address to 435-294-0433, 435-294-0433. So it is that time of the Tuesday when we announce who the t-shirt winner of the week is. And this is for last week's winner. Remember, if you want to be the winner for next week, we're looking for positive comments. We'll announce that next week. Now, the winner, last week's winner of the week is, drum roll please, our winner was Jose Alvern. I'm hoping I'm saying that right. Jose, congratulations. Super excited to be the t-shirt winner of the week. We would love to send that out to you. Now, we pay for shipping, pay for the shirt, pay for all of that. So, Jose, what I need to have you do is email us at support@DoHardMoney.com. In the subject line, please put "You are the shirt winner." Make sure you put your screen name, your mailing address, your cell phone, and your shirt size. Make sure you get us all those details. Once you do that, we will send you out your free t-shirt of the week. But remember, I want you to take a picture of that and post it on our Facebook channel. I greatly appreciate it. Love to have you on the Facebook channel. All those who participated, if you want to find out if you're the t-shirt winner for next week, you are going to want to join us. Next week, we'll be announcing this week's t-shirt winner of the week. Next week, we're going to talk about how to use your personal residence to fund your real estate investing and make serious profits with it. I'll be covering that. You do not want to miss it. That'll be next Tuesday, 6 p.m. Eastern Standard Time. If you haven't already gotten your property value analysis, please send me a text message with your email address to 435-294-0433, and I will get that sent out to you right away. All right, guys, I really appreciate so many of you being with me this week. I have enjoyed it. I hope you've enjoyed learning about bankruptcies and how you can find properties with that. I hope you've learned about speculating versus investing. I hope you've gotten a copy of our free property value analysis that we spent 20 years putting together by texting me your email address at 435-294-0433. And more than anything, I hope you've been inspired, uplifted, and wanting to do more in real estate investing and on the road to passive income and on the road to making more active income in your fix and flip, wholesales, or whatever you are looking to accomplish. If you're currently not a member with us, you're welcome to check us out at DoHardMoney.com. Otherwise, guys, make it a very profitable day, and bye for now.